Hey everyone, it's Jack, and welcome back to another WealthSimple Challenge update video. We just finished week number 3 of my small account challenge, where I'm aiming to bring a $1,000 account up to $100,000 through saving like crazy and smart investing. So if you're new to the challenge or new to the channel, welcome. In last week's update, I said that my goal for the week was going to be overall to trim back some of my growth stock positions in order to diversify and de-risk my overall account and portfolio by then adding in some dividend and long-term passive income positions to my overall account. So that's exactly what I did this week. It's going to be a jam-packed with a lot of info and details. So let's jump right in. I hope you guys enjoy. So my WealthSimple account currently stands at $1,495.32. So we are up overall in value, just over $100 from last week, but that is because of me adding more funds and saving money and adding it into the account. Because as we can see, the overall account is actually down 1.93% this week. The overall market had a pretty down week, and we'll see as I go into the video that my main two growth stock positions both went down this week. So that brought the overall account down, which is expected. And we can see that we're just slightly down overall in the past month for the overall account. So if we dive into the actual positions that I'm now holding in my WealthSimple account, we can see that I did exactly what I said I was going to do. I trimmed back several growth stock positions that I was holding last week. So I will put them up on screen from last week and I'll compare it to this week and you can see the difference. So I have cut back some growth stock positions in order to diversify my account into dividend stocks. So you can see that I still hold 7 stocks within my portfolio. They are Algonquin Power, Enbridge, H2O Innovation, Real Matters, Standard Lithium, Smart Centers REIT, and TELUS. So those are the 7 positions I currently own. So we've got 3 growth stocks in H2O Innovations, Real Matters, and Standard Lithium. And then I now have 4 dividend paying stocks in Algonquin Power, Enbridge, Smart Centers Real Estate, and TELUS. So we've cut back 4 growth positions that we had last week in order to replace them with 4 dividend paying stocks in order to overall diversify and bring down the risk of the overall portfolio so that it doesn't swing as much week to week and that we're going to be starting to earn some dividends and get some passive income rolling into the account so that we can start to snowball that and grow the account even more. So Monday morning, I exited most of my growth stock positions that I featured last week in XBC, Good Food, as well as cutting back my Real Matters significantly. I actually sold all of my Real Matters really early on in the week. And unfortunately enough, it went down right after. So I got out just in time. And then as you can actually see, I've repurchased 5 shares of Real Matters. It was kind of too good to pass up. It was down to $16.50 per share. And like I've said in previous videos, I think the stock does have the potential to get back into the low 20s range. So I couldn't pass up on picking up 5 shares. And as far as H2O and Standard Lithium, those are my 2 largest position sizes by quite a fair amount. Like I said in my previous update video, my goal for both of those stocks is to get around $1,000 worth into each. So I'm currently at about halfway there for each stock. I have 165 H2O and 115 Standard Lithium shares. So you're going to notice that both of those stocks came down quite considerably this week. And for me, I'm still in the buying phase and accumulating more and more shares. So really, it's not a bad thing. I've just been buying at lower prices and bringing my overall cost basis down for both stocks. So I've been able to actually bring my overall cost basis down about 10 or so cents for both stocks. And like I said, if you haven't seen one of my previous videos where I cover both of these stocks in depth, these are long-term holds that I'm planning to hold for years. So I'm not really worried about them coming down 10% or so. They're going to swing, and that's part of having the risk of having growth stocks in your account. You have to be able to stomach seeing your account go down and seeing some of those stocks go down. It's just part of the process, and the stock market goes up and down. But overall, those are both long-term holds that I'm not getting rid of anytime soon. And then as for my dividend stocks that I've added to my portfolio, I've added Algonquin Power, AQN, as well as TELUS, ticker symbol T and ticker symbol AQN. These were both featured in one of my previous videos this week where I talked about 4 dividend stocks to buy and hold for the rest of your life. So these are stocks that I'm going to be adding to and adding more stocks to the position size, because really these are stocks that I have faith in holding for years and years to come. I think both are going to continue to increase their dividends year over year. So we're really going to be able to get some good passive income from these stocks. And I've also added Enbridge. Enbridge is an oil and gas company that got hit really, really hard by the overall pandemic and still has quite a ways to go to recover back to its pre-pandemic highs. Analysts are rating this stock a really strong buy. I'm going to feature it in a video coming up this week, but overall my goal for this stock is to collect some dividends while also waiting for the stock to continue to creep up back to its pre-pandemic levels. Hopefully you can get a 20% return on this stock while also collecting some dividends. So really for me, this is kind of a double win. You're going to be collecting dividends as well as seeing the stock appreciation. And then the final dividend paying stock that I've added to my portfolio this week is SmartCentres Real Estate Investment Trust, SmartCentres REIT. I also featured this in a previous video where I went over 2 monthly dividend paying stocks that are great to add to any account. SmartCentres was one of them. They offer a over 7% dividend and they pay out monthly. So we're going to be able to get some monthly cash flow into the account, which is really nice to have, and it will allow me to use those dividends towards either other dividend stocks or other growth stocks that I may be adding over the week. So overall, I trimmed back some growth positions in order to diversify into dividend stocks. I think this is a really smart move going forward, especially since market is pretty high right now overall. There's rumors that we might see a market correction in 2021. So I think having some dividend stocks in your portfolio in case there is a market correction, because if the stocks go down and you only have growth stocks, you're not going to be getting any dividends. But if you have dividend stocks in your portfolio, you'll be able to collect dividends while you wait for the stocks to bounce back. So that's a really powerful thing and something that I wanted to make sure I had in my account. Algonquin Power, TELUS, and Enbridge all saw quite significant dips this week. That's the reason I decided to add these positions to my portfolio. I saw them at a really nice dip, and I'll just keep averaging in and adding to these. For SmartCentres, I only have picked up 2 shares currently because the price has gone up over the last few weeks. So I'm waiting to see if there is going to be a little bit of a pullback in SmartCentres price where I can add in some more shares and bring that position size up. I've started an Excel spreadsheet to track my dividends as well as my overall portfolio diversity. So let's hop into it and check it out. Here's a really quick spreadsheet I whipped up just in order to track the stocks in my portfolio, along with the dividends that they will earn me. So you can see I've got the stocks, the tickers, the sector that they're in, the average cost per share that I've bought in right now, along with the number of shares I own, and then the percentage breakdown of my portfolio. So how much does each stock take up in my portfolio? So you've got the dividend per share, as well as the current percentage yield for that dividend, as well as the annual dividend for each position. So if we go over here to my dividend tracking, we can see that already with our small portfolio and small percentage of dividend stocks that we currently own, we're already getting $26 in dividend payouts annually. That might not seem like a lot, but we're going to see week by week that this number will increase quite significantly as I continue to purchase more and more dividend shares. And as those dividends grow over time, this number will also increase. So the monthly average right now is just $2.22. But again, we're going to see these numbers grow, and I really just want to keep track of this so that on a week-to-week basis, you all can see how this monthly average, as well as the annual dividends, will really increase over time and really start to be meaningful passive income. So now looking at the chart, we've got my portfolio breakdown, and as you can see, over 50% of my portfolio is made up of HEO and Standard Lithium. So we've got over 50% in growth stocks. This was my initial strategy, to accumulate growth stocks first in order to backbone my account and its growth. Now I'm starting to break into the diversification through the dividend stocks, and you can see that the dividend stocks make up roughly around 40% of my account currently. I want to increase this number. I want to continue to de-risk my account and diversify into more dividend stocks, specifically ETFs, over the next week or two. If we go over to this week's watch list, there's a list of stocks that I'm currently looking at this week and watching potentially to start a position in. We've got Good Natured Products, which I will have a full video going into detail, analyzing and looking over the stock and company coming out tomorrow. So stay tuned for that, as well as another penny stock, Green Lane Renewables, which is doing some really exciting stuff, and I will also be doing a video on. And then for the overall dividend stocks, the ETFs specifically, that I'm looking to invest in over the next week or so that are on my watch list are the BMO Covered Calls Canadian Banks ETF, ticker symbol ZWB. This is an ETF that offers an over 6% dividend, and it gives you diversification into all of the Canadian banks without having to purchase them all individually. They're all pretty expensive stocks, but this ETF trades around $18. It's an affordable way to get exposure to all of the Canadian banks at once. So I'm looking into this, as well as the Canadian High Yield Dividend ETF by Vanguard, VDY. This is a dividend ETF that offers around a 4% dividend and has a lot of the Canadian high yield dividend stocks within it, given by the name. And the final ETF I'm also looking at potentially buying is the Vanguard S&P 500 ETF, ticker symbol VFV. This is a great way to get exposure to the US market by purchasing this ETF instead of having to do conversion fees to American dollars in order to purchase US stocks. So again, these ETFs are just another way for my account to get de-risk and get more exposure and diversification to other sectors that I don't currently own. Let me know if you have any other growth stocks or ETFs that you think I should have on my watch list or would like to see me cover in a future video. And to reiterate, I really appreciate when you guys leave comments letting me know of certain stocks that you think I should add to my portfolio or that you really like, or even you just want me to check out. It really goes a long way. And remember, we are doing this as a community. This challenge is all about learning about stocks and continuing to grow and get better at investing over time. So again, I'm learning, hopefully you guys are learning, and we're doing it together. Again, I urge you to start your own challenge. Start with whatever you can muster up, whether it be $100, $250. Start a WealthSimple account. There's $0 commission, so you can buy and trade one stock at a time if you want, and really just learn with baby steps. That's how I've learned, and you'd be really surprised how fast you can start to pick up and learn things about the stock market and investing in general. Over time, you'll start to get a lot more knowledgeable, and you'll thank yourselves years down the line when you look back and started this challenge. So again, there's going to be a link in my description. If you start a WealthSimple account using the link, you're going to get a free $10 when you trade your first 100. That's a free 10% return on your investment. So you should definitely check that out and join me in the challenge. We're in it together, and let me know what stocks you're buying. So I hope you guys enjoyed this recap and update of my overall small account. Let me know your feedback in the comments, and I hope you guys enjoyed. If you did, smash that like button and subscribe to the channel. Stay up to date with all my latest updates. I hope you guys enjoy, and I'll see you in the next one.